I'm joined from our Melbourne studio by Dale Gillham. He's the Chief Analyst at Wealth Within.
Joining us this morning on Studio 10 is financial expert Dale Gillham. Hi, Dale.
Hello. Finance expert Dale Gillham from Wealth Within. It's nice to see you.
It's amazing listening to a professional trader who's doing what you're aspiring to do and hearing it firsthand.
Too many people ring me up and say, hey Dale, I want to make quick money, but it's not about getting rich quick. I think we can go for about 4 hours, but I'm not sure my wife would like that. So
I'd say congratulations for putting your time and effort out there, because you probably don't really have to do it. You're successful traders in your own right.
Thank you very much for opening up my mind with trading.
So of course you can succeed, of course you can, and you're the only one holding yourself back or succeeding, and that feels very empowering actually.
A quick reminder before the show starts that this live stream is an educational tool, and as such your personal circumstances have not been considered. We hope you enjoyed this week's show.
Good evening and welcome to Wealth Within Live, the Australian stock market show where you ask the questions and we give you the answers to all things investing and trading. Now, tonight is a very special night. I'm Janine Cox, Senior Analyst here at Wealth Within, and I have a lot for you on the program tonight. Now, Wealth Within is Australia's most trusted stock market educator. Now, normally Dale would be with us on the show, but he's taking a well-earned break today. However, he did prepare something interesting for you tonight. So he'll explain a few aspects on a well-known mining stock, so make sure you stay tuned and watch that later in the program. Now, tonight we have a huge lineup. We'll give you our thoughts on the market. We also have the results on a latest poll, and I'm going to share my insights into the performance of another 20 top stock on our market. So that's a well-known one that some of you may have in your own portfolios, or you may even have it in your super fund. Now, one of you raised this topic in last week's forum, and of course we also cover stocks that you raise on the chat tonight, so stay tuned for that as well. Now, I'm going to be a little bit cheeky here. If you want me to share with you some information about back testing, you have to agree to something first, and that is you cannot tell Dale that I've talked about this tonight. So, have we got a deal? Please type in your agreement. Now start typing on the chat. The way to get the most out of tonight's show is, of course, to become an active participant. This is your show, remember. The more you get involved, the more you personally gain. So ask questions and help me to make this the biggest show yet. What I'm asking you to do is message your friends and family now, encourage them to join in. And tonight, as always, our goal is to share with you how you can become more profitable in today's market. Remember the chat box off to the right of your screen? We'll get typing and ask your questions. Let's start the night with a brief rundown on the market. If we can bring up Optima, please. Now on the screen there, you can see that I've got the All Ordinaries. Of course, I've got the monthly chart on the right, which is what we always do, and the weekly chart. Actually, I've got two monthly charts for you. So on the right-hand side, now I've got the weekly chart for you. Now, looking at the left-hand side, you can see that we've had 4 months up. So this month, the market has actually broken last month's high, which is good to see, but it hasn't yet gone through the July 2018 high, which we're all anxiously waiting in anticipation for the market to do this. So looking at the right-hand side of the chart, you can see there, we talked about this last time on the show, how the market had consolidated for a few weeks. It went down for about 3 weeks, you can see there, into this low in March 2019, and then went up for a few weeks. So it's about a month up since then. Look at you already, a few of you writing a few things for us on the chat. Thanks very much for making your comments there. And CSR, someone's already asking for that tonight, so you're getting in early, Peter. So good to see the All Ordinaries pushing higher. However, we're still waiting for that pullback on the market, and it may come after it breaks this high in August, in July 2018. It may need to push through that high point there. You can see that blue bar on the chart. Now, a blue bar, for some of you who have only just tuned in, that means that the high of the week in this case it's a weekly chart, is actually higher than the prior week, and the low is lower than the prior week. So that's why it's colour-coded blue. The colour coding you're seeing on the chart now is what we teach students, and how this helps in learning how to read charts and be really clear about the direction. And I think in previous weeks, Dale and I have talked about the bar charts, candlestick charts and swing charts, and how to just use a bar chart to read it. Now, I am missing Dale on the show tonight. He wasn't able to make it, but he's actually on a well-earned break at the moment. So it's really good for Dale to have that break, but he will be joining us, as I said, on the show tonight. So he's got a special segment prepared for you, so you'll really enjoy that. And it's going to be some really important insights about a particular stock on the market. It's one of the big mining companies on the market that some of you may have actually traded it before. It can be quite a volatile stock, but still a good steady stock to trade. So look, I mentioned briefly a bit about the All Ords, and I've got it back up on the screen there for you. So you can see here that we're still waiting to get through the all-time high prior to the GFC. We've actually had quite a few surprises lately, because prior to elections, often the market can slow right down. Now, it hasn't actually lost any steam, and I thought about this on the weekend before preparing for the show. And I've been watching some of the news reports on the budget and what the Liberal and Labor government are proposing. Now, I don't tend to get into too much political debate on these sorts of shows, because I don't want you to throw something at your TV screen if you don't like what I'm talking about, if I mention one side or the other. So, but what the gist of it is, that there's all these tax cuts that are potentially coming the way of individuals, and I had a look at Liberal and Labor sides. So that's one of the things that, it's not just the fact that, okay, BHP and Rio and some of the mining stocks have been up well, but you know that 30 to 40% of our market is financial stocks. So that really needs to get pushing higher for our market to really move on. But you know, it's often these tax cuts when they come in. If you look back over many years when governments have proposed tax cuts, often that has a positive impact on the share market. So look, that's what I thought I would cover tonight on the market before we get into a few more things. So before we get into the stocks, let's find out the results of the latest poll that you participated in. I know you're hanging out to find out what it was. We really need a drum roll. I'm not going to make the sound effects for you though tonight. We asked you all what your stock market goal is. Your options were to start trading, to be more profitable, to replace my income, to prepare for retirement. And I have a chart to share the result with you. So let's bring up the poll results. Now, if we can have that on the screen, please, that'd be great. Now, you'll see on the screen there a really interesting looking graph prepared for you. Now, this graph is showing that 48% of people really want to replace their income. So that's almost 50% of you are really focused on that side of it. So thanks for showing that for us. And I've got a nice little graph here myself to have a look at. And then I've got 35% of you wanting to be more profitable in your trading. And I can understand that, particularly given the statistics that we've got. So if we look at this now, if 50% of you want to replace your current income, then the thing that I want to ask you is, think about, when would you like to do this by? Set a date. And some of you may think, well, gee, I never thought about it that way, and I didn't think that I could just set a date and potentially achieve it. And that's a challenging thing, particularly for people when you're first starting out, to work out, well, what is achievable and how can I do it? That's a really important thing. But if there was no objection to any particular date, what would you choose? Some of you might say next week you want to start doing that. Also, what would your life be like when you've achieved this? I mean, that's really the point of it, isn't it? People often say, look, I want to do this so that I can make money, but it's about what's it going to mean to your life and what choices will it give you? And that's really important in this whole thing. So it's important to you to have a clear picture of why you're wanting to do this, what you're going to do to get it, and when you want to have this by. Now, 35% said that their goal is to be more profitable. Also, have a think about how much money that you want to make and by when. If you want to improve your profits, then how are you going to do that? That's the question, isn't it? I know you're wanting to get some pointers off this show, but as Dale and I have said before, if you're really serious, and think about this on a scale of 1 to 10, if you're really serious about becoming more profitable, generating an income, then you're going to be scoring up around the 7 to 10. And a lot of you, if it's important for you to do it within the next 5 years, then that's even a higher score for you again. So 16% said that their goal is to start trading, to actually start it, which is awesome. Think about what you must do before you get started. You're really at a fork in the road, I think, at this point, because you could take the path that most people do. So majority of people, they take the path of listening into chat forums, trying to get tips on stocks, anything free that they can get, rather than doing what is actually faster. It's the tortoise and the hare all over again, and saying, okay, I need a structured approach to this. This is what I've got to do. Director style people who know what they want, that's what they do. They call us and say, this is what I want to do. I've heard about this course and I want to get started. And other people can take a few years to do this. And I can remember Dale showing a chart of how long it takes people to get from the point of starting trading to the point of being experienced and becoming profitable, generating an income or whatever it is that they want to achieve. And it was like drawing a vertical line with an arrow on it, if you can imagine that. And then over the top of that is a squiggly line that rotates from side to side. So some of the people are going to take the direct route and other people are going to dance around that line and take different amounts of time to get to where they want to go, and some may never get there. So this is something that I'm really challenging you to have a think about and talk to us about it, and we can help you. There's plenty of different options to get you there. So think about what it's worth to you to get your goal. What are you prepared to do to actually achieve that? So right now, more than 80% of you either want to be more profitable or replace your income, and some want both. You don't want to be too greedy now, do you? Maybe you do. We also know that around 83% of those watching are either novices or have been trading for less than 12 months. So this is great. I mean, it's one of the most fantastic things. If you're in the early stages of starting out, you've got a much better chance of getting it right and being on the right path than spending 10 years, like skirting around the edges and never really making it. More than half, around 65%, are 25 to 34 years old. And I just think, we spoke to someone the other day who actually signed up in their 20s, and I think he was only 25. So excited about the fact that you're doing that at that age, and I can just see the path that you're going to take from here. So these statistics are really important. Have a good think about it and what it means to you in terms of setting your goals, because even if you didn't vote this time, I'm sure that you can decide which group that you're in and how important it is for you. Now, we've had some great comments on the chat. Thank you very much. Thank you to Kang Good evening, Janine. Can you please have a look at PNC and APX? So we've got a few stocks here that I can have a look at soon in the show, but before we do, we'll get into your comments shortly. Just stay tuned for a moment. I've got a comment that someone posted during the week. William, could you please look at WKT? It isn't a share I would usually invest in as it is super volatile, although it has such a large uptrend in progress, and I'm intrigued to jump on board. Do you think it would be wise to do so as long as I have a stop loss? Now, this is what he's asked us to look at. So if we can bring up Optima, then I can show you a chart of WKT. Now, you can see this chart on your screen there. Now, remember how we talked about liquid stocks? You can see the formation of the bars on the screen and how they look like they go sideways for great periods of time. And see this period down in here into this low, and then all of a sudden make a move up. That was into May 2008. But even on the monthly chart, look how much time this stock has spent going sideways in a tight range before it eventually starts to move up. Now, it does look like it's actually broken that sideways trend, which is really important, I think, for a lot of people wanting to find stocks. If you're looking for good solid stocks and you're watching them, trade with the trend. A stock that's going up and down and all over the place like it has here, much harder to trade and to be able to get it right, because you would have been tricked in and out of this trade along the way. Have a look at that. Look at the illiquidity of this stock. You can see the bars where it's traded weeks and weeks at a time, and it's just repeating the same range all over again. So that's a really telltale sign of what you look for when you're checking for stocks that basically you're better off not to be in. Particularly when you're learning. If most of you guys are learning, Dale occasionally says that you could put 5 to 10% of your capital into something, and that's the allocation for your portfolio, into something that is a bit more volatile. But even this is probably at the low end of the spectrum of that. So look, do you think that it'd be wise to do so? Look, I think that personally, if you're asking me that, then I know that you've, and please don't take offence to this, but you obviously don't have a great deal of knowledge, because at this point in time, this is a very high risk proposition. So unless you know how you're going to buy and how you're going to sell, you wouldn't touch any stock. You need to be prepared and have a plan and know exactly what's going to trigger your entry and exactly how you're going to get out. Because I've seen stocks like this go up on news and then plummet significantly afterwards, which has wiped out people's capital. So you could have stocks that you think, oh, they're a bit boring, going for, say, BHP or Commonwealth Bank, because they might plod along over many years, and choose something a bit more exciting because you're bored, and then end up doing all of your dough on a stock like this. So it's just not good sense. You really have to ask yourself, what is in my psychology that's making me look at this? The other thing to think about is the really successful traders, the super traders, they have a handful of stocks that they trade all of the time. So they don't go looking for little stocks like this to be trading. So that's another thing to think about. And which path do you really want to follow? Are you going to be disciplined in your approach, or are you going to just sort of look at the next thing that comes across the radar? So that's something to keep in mind. So that's a response I have for you on WKT, Walkabout Resources. Clearly, it looks like it may be recovering, but it is quite a liquid stock and not something that you necessarily want to start out with. So I've got 3 or 4 stocks now I'm going to start looking at from the chat. I've got CSR here from Peter. You're very patient, and you got in early and you put your stock up there early, so I can't very well say no to you. I know you're smiling out there right now. Now, on the monthly chart there on the left-hand side, you can see that I've got a really nice, interesting looking chart there where it trends well, but then it has up to about a year where it falls down, 6 months to a year, and it just loses ground. Now, this is not the whole history. If I go back over the long term, you can see that CSR's had a checkered past. It was one of the dog stocks for a while there. DOG, that's not a code for a stock, although that could be a code on some exchange. But looking at the low in June 2012, you can see it really kept going. While the market was recovering in 2012, it kept falling. So that's something interesting to really pay attention to when you're looking at a stock's history. How did this stock perform when the rest of the market was falling? Now, looking at what it's done since, it has had a really nice trend. Now, a simple set of rules, and we talk about this in the Trading Mentor course. Dale's going to talk to you about this in the recording down the track, give you a simple example. Even on a monthly chart, people think they've got to trade daily charts to make money. That's absolute rubbish. When you actually use the chart and follow it, you can see the chart is going to tell you what's possible. So just ignore what people are saying and actually prove it to yourself by looking on the chart. So I can see there were a number of opportunities off lows to make returns. See, each time it goes up, it trades up for quite a period. So here off the bottom here, we had a 65% run there. So who says you can't make money off big stocks? 57% off that one. And there's a pattern here emerging as to what this stock will do, 53. So if you know that this stock has got a personality, it's like a friend of yours. If they've got a certain personality, you know what not to say to them when they're in a bad mood. CSR, when you're looking at this stock, if you know that it's likely to rise a certain distance and repeat that pattern over time, then you can trade it. You may not trade it on the monthly chart, but you can. There's plenty of people that I've challenged to do this, and they've found that much simpler strategies on the monthly chart. They don't have to pay much attention to it. There's not all that time involved, and they can go off and do what they want to do in life without sitting in front of a computer screen all day. So looking at the stock on the weekly chart, we can see a different picture emerging where CSR is a bit more volatile. So Peter just wanted our thoughts on it. I think right now it's looking really good. It's just moved out of a consolidation pattern and it's trying to make new highs. It's making higher lows. That's another important thing to look for on a stock. When a stock swings up and down, you can see the movements. Just follow the bouncing ball. Follow my arrow. And it'd be nice to have a bouncing ball on the top of the screen, actually. Maybe the producer will be able to do that for us one day. And then looking at this, we can see that it's just bounced up again. So if we get a nice strong close at the end of the week, that bodes well, and it's likely to continue to run towards the $4 mark. If it actually comes back and takes out this low, then I'd be a little bit more concerned about CSR. So think about, where's your stop loss? How am I going to protect my profits if I'm already in the stock? If I'm not in the stock, what's the potential upside? I mean, at times, stocks like this, if I can just find a price retracement for you. So here I'm going to apply that from the chart here. I'm just looking at how far the stock may run. It's got the potential to go to around 420, but I'm reasonably confident about it getting to around the $4 mark if it closes high this week above the high of 358. So let's keep watching that one. So thanks for that, Peter. Good stock to mention. I'm just going to bring up another one. It's called PNC. Now, PNC is quite interesting in terms of looking at Pioneer Credit Limit. It's on the small end of the scale of things, and looking at how it's actually traded recently. Now, this is what I mean with these smaller stocks. It looked brilliant. You know, up until March 2018, you wouldn't have even thought that this stock would behave this way, and all of a sudden it had a big tantrum, if you like, a bad situation for PNC if you do a bit of research on it. And it doesn't take much for these lower liquidity or higher volatility stocks, to then turn around and start heading south and being sold off, potentially being shorted in the market by people who are looking to make money as the market falls. So ENS said, I think DOG is an ETF that shorts the Dow. Well, look, it may be, but look, we used to use that as a joke years ago, Ian, about any stocks, and I think Telstra got labelled with DOG, Dale labelled it at one stage, and there's plenty of other stocks that we joked around with that. John Leslie says, do you think BHP still has room to move? That's another one. Look, anything's possible, and I've just finished talking about PNC first, and then we'll come back to BHP. But you can see how the moves down have changed the whole personality of this stock. Look at the volatility within just a couple of months of where the stock's falling to 22, 23% each time. Let's see what it did the next time. Just get to know your stock that you're looking at, that you're interested in, before you invest your hard-earned money in it. Don't trust things that you read without having a look at where the money's actually flowing, and if they're putting money into it, the share will be going up. If it's going down, then what you're reading, if it's a good news story, is probably absolute bollocks, and someone trying with a vested interest trying to move the share price. So looking at this, you can see it's had pretty decent falls on some of these moves here, and I haven't measured every one. So right now, you know, my thoughts are that I wouldn't be poking a stick or going anywhere near this particular stock at the moment, because it's heading lower. And look, never think that a stock can't go through its all-time low. It always can. There is a support level around the current price action where it is now, so it may slow down now, but it would have to do a lot, and the monthly swing would have to be up. So currently in April, you can see that red bar, the high of the month and the low of the month, they're lower than the previous month. A move up through the high of this month's bar when this month finishes, if May's up, that would be the first interesting sign for this stock. But again, it's not a stock that you'd be chasing after. So let's have a look at BHP quickly. That's one that John Leslie's brought up. Thank you, John. Have you got he said, have you got a particular interest in BHP? Is that something that you've always been watching? Perhaps that's a stock that you've been following for a while, and why have you got? Oh, you got in at 32.23. I see. Okay, so you've still got a bit of profit in there, which is good to see. A nice trend on the stock. So these lows are getting higher, as you can see, which is the first important thing to look at after looking at the monthly chart to see where the trend is. So we're on the weekly chart now on the right hand side, and you can see the highs are getting higher. So a few weeks down each time. We like to see that. It's good to see those little moves in the opposite direction just to firm up its position and then move higher. But there was a news announcement on the weekend. Some of you may have heard about it. This was about Vale and the restrictions being removed on Vale, and this may turn things around. So last week we saw the big moves down on some of the miners. So it looks like they knew what was going on there already before the news came out. So then looking at that, we can see so far this week there's not much activity happening. So it's a bit of an inside day today. So Thursday, the 18th, was strongly down. We can see this is a daily chart, BHP gap down. Now BHP makes gaps all over the place. Doesn't mean it will come and fill them ever. Doesn't mean it will fill them straight away if it does fill them. So you can't judge this particular stock. And a lot of the reason for that is because it's trading on 2 exchanges. So something interesting to think about if you're trading stocks that are on dual exchanges. So I'm looking here. I've talked about, Rosie's back on again. Can I have a look at MIN as well? Rosie, thanks very much for that. It's good to see another lady get in there. And don't just think, guys, if you pose as a woman on this chat that I'm necessarily going to pick you out of the crowd first because you're female. We're totally not sexist here. So men and women, it's all equal. Now, MIN, Mineral Resources. Now, this is an interesting one, isn't it? Very interesting stock. Now, I thought this looked quite good when it was coming out of this low here in November 2018, started to poke its head up. This is the monthly chart again on the left-hand side. And you can see that it has had nice trends, but it's also had periods of decline as well. So this gives you a really good understanding of how the stock behaves when it's actually in decline, so you're prepared well for it. Now, looking at the right-hand side, you can see that it's extremely volatile. And after a high, its personality does change, so you could get whipped in and out thinking, like, look at this period here in May 2018, looked like it was turning around and going up strongly, and all of a sudden it went down again. So that's where you have to be really mindful of having proper rules, because there was potentially a trend line entry there, and then but no alternative theories, no combination rules, which is something that we talk about in the course. It's not just having one tool or 2 tools in your kit bag, it's having multiple tools and then doing the back testing to work out what is the best tool to use. And I'm going to talk a little bit about the back testing on the forum on this live show tonight. So looking at the stock, it immediately then reversed and is then trying to find its feet again. So it's still not out of the woods in my opinion, and really needs to move strongly. If I put this nice little line on the chart there for you, that'll help you see what I'm looking at. This is a really important level for the stock right now around this zone, so it's really got to prove that it can get back strongly above the $17 mark, and that could help it rise in the short term. Of course, we always look at the downside as well as the upside. Don't fall in love with your own prediction. That's one of the things that we talk about. But if it fell below $15, then I'd be quite concerned about its position going forward. So then I've answered that one, Rosie. I hope that one helps you. And then Ben Mills, Dale and Janine, just wondering what your thoughts are on REH, that's Reece Limited. So I've got time for another one. So REH, that's Ben. Could you please have a look at that? Thanks, guys. Okay, happy to do that. So let's bring up REH. And do you shop at Reece's? Is this something that you've studied for a long time? Is it a stock that you hold dear, and it's interesting that some of us get, especially when we start out, we really get excited about stocks that we know the names of. I don't know if you do, but if you have, maybe you haven't, but I can remember that happening with me. So BHP was like the big Australian, they've been promoting themselves as that again recently. So looking at the chart here, you can see really nice long-term uptrend. It has changed a little bit for Reese's since September 2018, but the whole market went down into decline. So that was really a market move into December 2018. Put it in context with what the market did, but then the market shot up and this stock has really been left behind. So that's showing you something about the stock, that there's not the buying behind it that there is in other areas of the market right now. It doesn't mean it won't recover somewhat. It's attempting to do that now, but it's got a lot of resistance here around this $10 or $11 mark. It needs to push through to have a chance of moving up to challenge the all-time high. You know, for guys out there who have done our courses or are studying them, you'll be seeing all sorts of patterns jumping off the chart at you when you're looking at these stocks. So look, I think we better stop there for now, and I'll come back soon. I've had a comment from Jazz and Mac. I'm sitting on cash at the moment waiting for a pullback. Is this a good strategy? I'm being paranoid. Look, sometimes that can be one of the best strategies, to be patient and wait for the market to come back. But you really have to base it on rules and base it on a strategy, not just on gut feel. So, you know, it's about analysing stocks, knowing what the market's likely to do. But the market can always do something different, see, and that's where the challenge is. So you've really got to be trading with the market and following along with the market and making sure that you've got your risk management in place. It doesn't mean jumping in boots and all. It just means that sometimes it's important to take a position in the market in good quality stocks that have met your rules, rather than just sit out hoping that or thinking there's a correction that's going to come, and then if there's no correction and the market keeps rising, then you've missed out and you've had no exposure to that run. So it's about the rules, really. I think they're good question. So let's get off the charts now and listen to a report. In this report, Dale demonstrates how you find buying opportunities when looking at a price chart. Now, we did this for the Trading Mentor students. For those of you who are really keen to get started, there's a really great program that we've got, which is the Trading Mentor course, which Dale personally answers all the emails himself and helps you through that. And every fortnight you receive a recording on a stock that he studied, and this is a small part of that recording that he wanted to share with you. So let's have a look at that now, shall we?
Hello and welcome to Ask the Expert. I'm Dale Gillham, the Chief Analyst here at Wealth Within, and today I'd like to show you or talk to you about a stock called Santos Limited, or as ASX ticker code S for Sam, T for Tom, O for Oscar. Now, I did this stock for our diploma students, or our diploma and advanced students, graduates, a little bit earlier today, and I thought this just looks so nice that I really did want to share this one with you, and thinking that it does work quite well using the rules for Trading Mentor, and it will do so, and it'll actually it's one of those stocks that just hums along quite nicely, and it's a little bit easier to trade, and it will make you some really good returns when you get it right, and obviously you stick to your rules, or stick to your trading rules, as we talk about. So looking at the most recent history, if we just do this and expand that up, you can see here this sort of level here at that $7 odd mark has really sort of turned the stock, and it hasn't really since over this point in 2014. You can see it's closed just above it, opened just above it, closed just above it, open and closed just above it, open just above it, but really nothing too major around here. And then we come over here, it closed above it, opened above it, traded straight back down again. So you're really only seeing it close above it. That's once, twice, 3 times, 4 times it's closed above it since December 2014. In 4 years, it's only closed above that level. So it's quite strong. So you can understand why it's turned down a little bit here. But that said, I still think this stock looks really, really, really good. Just looking at this point in time and using the monthly chart, if we just put a horizontal line across here, that's the previous peak. I'll just make that black. and I'll just make it solid so it's a little bit easier for you to see, and put that across there. That's the previous high there at $7.48. If you look at the previous one, it says $7.47, so that is the high. Here's our prior trough at $5.14. It's higher than the previous trough, which is $4.74. So if this stock moves up and goes through this black line in this next move up without making another trough through here, then our entry would be 1 cent above here at $7.48, so $7.49. If it traded through there, we would get in just using that rule. Now, you're looking at this going, well, how much money could I make? Now, have a look at this. This is its all-time high back here at $17.96 back in June 2008. And its all-time low is $2.46 in January 2016. You can see here if I just... Sorry, not its all-time low. Its most recent low there, but its all-time low is way back over here in November 1992. So that's a massive, massive move. Now, when you see big moves of that sort of 6, 7, 8, 9, 10 years, you'll generally always see this sort of bearish move up. It moves up for a few months and then it really comes right back down heavy again over a longer period of time. And it's what we tend to call, for this really technical term, called a dead cat bounce. And that's really what it is. It just moves up and comes back and goes bang. And it generally won't break below the prior major low, which is 246. As you can see there, it hit 287. But sometimes it'll double bottom with it. It'll just get really, really close to it. Other times it'll come back 75 to 90% of the distance it rose. So you're seeing this sort of dead cat bounce move. And that's the move you don't take, because it's the high risk move. And we do get amateur traders buying in thinking it's cheap. And they go, oh, it's really, really cheap. You know, we're talking about, a stock here at $17.96. Now, if I go in and put on this tool here, you can see here that it's fallen. If I go 90% is pretty close. It's fallen between 75 and 90% of its all-time high price. That's a massive, massive move. 3/4 of your money plus has been evaporated by that time, and it nearly hit 90. So that's $1.79, and as you can see there, it got to $2.46. So about 70 cents off 90% of devaluation of its price from that all-time high at $17.96. So having a look at this, now is a good time to have a really, really good look at this stock and say, okay, so how far is it going to go? Now, if I stretch this out, have a look at the ranges that this stock is actually making. So if I go back to my price tools, click on my cool little thing, look at this little move up here, 105. If I just stretch that up, you'll see it, 105.69%. I'll just make it a little bit clearer for you, font size, 105.69%. Let's go to the next one, and we look at this major low and go to here, 97.56%. If we go to the next low here, 57.97%. So right here we've got this current move to where it hit earlier this week, 40% in 1, 2 and a bit weeks. So it can move quite well when you get the right signals from it, and you can make some very, very good money from this stock if you have the right signals. Remember, we're on the monthly chart. Sorry, I did say 2 and a bit weeks. That's 2 and a bit months. But either way, it's very, very good. 2 and a bit months to make nearly 40%. So that's well over 100% per annum. Here it's 1, 2, 3, 4 months. So it's 1, 2, 3, 4, 5 months, sorry. Here it's 1, 2, 3, 4, 5, 6, 7 months. Here it's 1, 2, 3, 4, 5, 6, 7 months, 7 a bit months to make that return. So it's really, really good. So let's go to the weekly chart now and bring it down here. So it does look quite bullish because it's been bullish. If it does break through that previous high at 748, it would give you a perfect Dow theory entry into the stock. So put this on your watch list. I'm not saying it's going to do that. I'm just saying this is a rule we have, that if it does it, then you can purchase knowing with high probability that it's likely to continue on. Now, seeing the all-time high is so far away, right up there, there's plenty of blue sky through here. So I'm thinking at this level here at 880 is the next resistance sort of level here from a natural resistance. So from its current share price, that's nearly 30% to that point. If we take it from obviously let me just get rid of that. If we take it from where it would break through the previous high, you're still looking at 17.5%, but it's likely to get further up into sort of $9 to $10 mark, and that's where I'm thinking it, if it does go up again. All too often when, for newer traders, when I start quoting prices, people think, well, Dale said it's going to go to $9 or $10, so it's going to do that. And it doesn't always have to, because it's always our best endeavour to analyse the stock, and it's always our best guess at where is it going to go based on our knowledge and all our research and our tools that we've got. But at the end of the day, the market controls what the stock's going to do. So the market will control whether it gets to $9, $10, $14, or whether it goes down to $5, not us, or not myself, basically. We just need to make decisions based on what we're actually seeing at whatever time that is. So in 3 weeks' time, or 6 weeks' time, or 2 months' time, I might have a different decision on how far I think it's going to travel. But right now, it is in an uptrend. It's in a confirmed uptrend, and it's looking good and it's looking strong. So it's highly likely to break through that point at some stage in the not too distant future. That's all I'm saying, and having rules, having your stop losses is really, really important.
Now remember to thank Dale on Facebook for sharing that clip and tell him what you found. Now, what you found interesting. Now what I want to do is talk to you a little bit about that, because it's really important to get a solid foundation when you're learning, and that's one of the things that you'll get when you're on Trading Mentor, is that solid foundation, but also an understanding of what you can and can't do, what is possible for a stock on the upside and the downside, and more of that comes out as you advance further into either the short course or the diploma. You know, and a lot of people say to me, well, look, you know, I really want to understand how far this stock might run. I've got no idea. Well, that is part of the journey and learning, and we'll teach you all of that. So all these questions that keep coming up that you have, that's a journey of discovery that you're potentially about to embark on. And some of you listening already are. I've had a few comments on the chat tonight from people who are doing the course. So now let's have a look at some interesting research on a top 20 stock that you might actually hold in your portfolio, and if not, you probably have exposure to it in your super fund. Can we bring up that image, please? Now, this is ANZ. I had actually a few questions from people during the week asking if could I bring up other banks to talk about, and I think ANZ's probably a pretty good starting point for you. It's actually been voted by some of the brokers as one of the top stocks. Now, should we pay attention to that, and or should we look at the chart? And I think we should be looking at the chart. But first of all, I wanted to show you the history. We did this some weeks ago. Dale and I talked about BHP, and we talked about the years where there was growth and years where it was underperforming or went into the negative, where the stock was falling away in a decline. Now you can see on the left-hand side there, I've got the year. So I started this in 1984, all the way through there. I'm just going to scroll up slowly. You can see down to the bottom in 2019. So there's quite a few red sections there. Now the negative, there's actually 13 years. So this is a calendar year, from the start of the calendar year to the end of the calendar year. Say for example in 2018, the stock fell by around that amount. So 13 and 23 positive, that's a total of 36. So 36% were negative, 64% were positive. So still it's on the positive side. Wasn't as strong as the BHP statistics that we saw previously. So BHP was actually more up around the 70% odd for the positive years. And if you know that 7 out of 10 years are going to be a good result, then it's a reasonable stock to be able to trade and get some really good returns from year to year. ANZ's proved to be a little bit more volatile, particularly in the past few years and since the GFC. You can see all these red squares since 2007. So we had a -3 in 2007 and -44 in 2008. Now some of this data actually hides the real depth of the fall of some of these stocks, remember, because this is just calendar year, so from 1 January through to 31st of December. And in fact, it could fall more than that during the period. And this is one of the things that I alert people to when they're looking at their managed funds, because often, and we showed you an example of how the market can get ramped up into the end of the quarter, so that the degree of the depth of the fall, which eludes you from understanding the risk around the type of investment that you actually have, because a stock or market can always keep falling like it did in the GFC. Now, looking at that, we can see since 2007, 1, 2, 3, 4, 5, 6, 7 of those years were actually in the negative. And even the positive years, there was a few good years. At the most, we can see 2 years in a row where there's been a negative or a decline on this stock. Let's go back up. But prior to 2007, it could have just been 1 year, and then the following year it was a good year. So they were pretty good odds, really, when you think about it. In 1 year, if you had negative 13, looking at the history before that, you could have said, well, 1995 was likely to be a good year. But then if you assumed that 96 was going to be a negative year, you would have missed out on 25%. So this is where it's important to be able to see the chart and have rules and to trade this stock. Now, one of the reasons I picked this stock is because when traders become experienced, they think they've got to choose all sorts of little stocks to make money initially first before they become experienced. And when they become experienced, they start to see the rhythm in some of these stocks. And ANZ has a really lovely rhythm when it gets going. I'm going to show you that in a minute. So looking at the chart in the middle of the screen, it's a graphical representation of what I'm showing on the left-hand side. And it really shows you how many more positive years there are versus negative years, and the degree of these positive years versus the negative years. So that's probably a bit better. You can see when it does fall and has significant declines, it really heads down to that sort of 40% mark. The biggest rises are anywhere between that 40 to 60% mark on the ANZ. So coming back to the highest level of growth, 1 year was 65% and the biggest loss was 46% there for ANZ. So let's actually go to Optima now, because I want to show you a chart of ANZ, and we can bring that up on the screen quickly so we can talk about what's happened with this and why I see this as sort of a rhythmic stock. Now, looking at it quickly, it doesn't look like anything special over the long term or on the monthly chart, particularly over the past few years since the low in 2009. It's been quite volatile. But then, like other stocks I've talked about, it has really stellar rises where you can make some good money out of it. And that's what I'm talking about, looking for those sorts of opportunities. Gee, didn't the GFC change the personality of ANZ before? All the mums and dads thought it was going to go up forever, and they thought buy and hold is the way to go. Well, look at that. In just a matter of 2 years, this stock lost, nearly all of its value, 60. Let's see what it retraced. I'll bring up something to show you. We're going to put a price retracement over the whole. I'll take it from way back here when it first listed, or maybe we'll take it from this low point here just to give you an example. But it fell more than 60%, so 60 to 70% of it, the rise that it has was wiped out in 2 years. Hence, buy and hold is not even a strategy anymore for banks. Just remember that. So I'm looking here at a few times where the stock has risen strongly. So we can see February 2016, that was a good period on the market. It rose, and so the ANZ went with it, but only to May 2017. Again, in early 2011 and up into the high in April 15. And we had the low, of course, in 2009, and it stopped in April 2010. So you can look at that, see how long the runs are, have a look at how far it rises in percentage terms. And if we go to the weekly, something really interesting here in terms of how rhythmic this stock has been, particularly through this period here from 2011. Now, this was a huge opportunity to make money on this stock, and I think once a stock has done something like this, it doesn't mean that it will never happen again. You've got to be watching for when it does start again, because the stock will return to some sort of rhythm eventually. But notice here, if I put our little price range percentage tool, have a look at what happens here. Can you see anything that seems to be repeating? Look how the stock makes a high and then a low, and then another high and then another low. Now, what's happening to the rises as it's going up? You can see that there. They're getting slightly shorter, aren't they? So there's a telltale sign that's giving you some sort of indication as to what's happening, that it's slowing. And then, of course, there's always a last hurrah with these stocks when they've been in a nice uptrend. And we saw that happen into the high in 2015 when the banks reversed. But see, it couldn't get back to these hefty rises that we were seeing around 30 or 40% prior to that. But see how rhythmic this is with the stock. 2012, we've got a low in end of 2012, in mid-2013, in another one in early 2014. It's quite timely with how this stock is moving as well. So that's another reason why I think, okay, bank stocks are still interesting to have on the watch list. I just wouldn't be loading up on all of them. You know, like I had a client tell me that they had all 4 banks, big banks, and that was partly an income strategy for the dividends. But just using a stock for dividend yield or income in that way is not the only way you can get income out of a stock. You can get income out of a trading strategy that is much more has much better risk considerations than just buying and holding where you don't know what the downside's going to be when it comes. It makes more sense, but it does take a lot of a shift in people's thinking to get them to look at it this way, and the understanding and knowledge to be able to actually do it, which anybody can get if you're just prepared to do it. So look, that's a discussion on ANZ. I hope you enjoyed that, and some of you may be looking to trade this stock. There's some really good opportunities for this short-term strategy on the bank stocks. But right now we're looking at the banks, and I'm not saying that it's a buy right now. It's starting to look really interesting, but ANZ needs to get some momentum behind it to prove it. It's sold off, got out of its some businesses that it held as part of follow-on from the Royal Commission, and that's supposed to make it improve. But I think with ANZ, they've made quite a lot of mistakes over time, so it still may be in for a bit of a checkered future and a bit of a volatile future. Still, we can't just draw the line in the sand and say that ANZ will never be good again, because I can say that often big stocks that have big periods of decline will then turn around and produce some really great opportunities to trade. So that's one on the top 20 stocks. We will talk to you about another top 20 stocks a couple of more top 20 stocks in the future. I've got a few more questions here, but before we do, let's keep moving on now. And this is going to be quite interesting to talk to you about a comment. This is from Joe, and Joe said, "I'm now watching your videos on a weekly basis. I found your comments remind me to block out the noise, to share of opinions, media, forums, etc., and stick to my own rules or fundamental rules before entering a position on any stock. I'm currently watching PGH for a few reasons. One being they took a huge hit after they announced an early half-year result, as required when price-sensitive news is known. Then, when they released the actual result, which was identical to the earlier announcement, a week later it took another hit of similar magnitude. So what he was wanting us to do was have a bit of a look at that, and if we can bring up Optima on the screen, I'm happy to do that for you. So let's have a look there at our screens there. Now PGH, that's Pact Group Holdings. Now looking at Pact, we can see it's traded to an all-time low now. Prior to that, the all-time low was March 2014. It actually had a really nice run on the monthly chart. Now, a big giveaway about a stock's weakness is when they do what's called a reversal. And looking at this big bar here, we can see that it's definitely out of character with the way that this stock unfolds, and it's a warning sign. So these are the sorts of things that you look out for. When a stock's making lows and then it's turning around at the end of the month and closing up, that's a good sign that it's likely to keep moving up. You can see these bars here in October 2016, November 16, continuing to push up. Here it's starting to get a bit of a doubt coming through with the close turning the other way. And the following month in February 2017, the close barely makes halfway on the bar. In fact, it doesn't get over the line. The following week it pushes through, but then we see this almost like the air's been let out of the tyres for Pact Group. And often this will come with some sort of announcement. Now this is where trend lines are quite ideal. And Dale demonstrated in his book, How to Beat the Managed Funds, which was the first one. Now you can get a copy of that on our website. It's actually free. Apart from the postage, all you have to do is pay for postage and we'll send you out that book. That demonstrates a lot about trend lines and how to actually protect your capital. Now I can remember people contacting the office when the GFC hit, thanking Dale for putting that in the book because it saved them thousands, tens of thousands, in some cases, these people who didn't have a lot to lose, but they were so grateful that Dale had shared that information. So if we can just flick back again to the stock, then it turns into a downtrend. So we can see this big decline on Pact Group. Now when a stock moves sideways like that, now you can see here it's really tried to get through and struggled. Now Dale showed you in that recording of Santos how the stock really tested a certain level, see that $6 level, and it's failed to close up and above it any of these months. In fact, look at all the closes, they're really close together, and then eventually the stock gives way. There would have been signs all the way through here, exit rules, our standard rules in the diploma and the short course, even in Trading Mentor, to get out, to preserve your capital. But if you don't know and you haven't studied this properly, and as part of the study we actually make sure that you know it, and that's one of the beautiful things about doing the diploma and the short courses, that you get there are outcomes associated with that course. People don't realise on first glance how much that is worth to you, to know that someone has actually reviewed what you've done and confirmed that you actually know what you're doing. So different to anything else that you'll find out there. So looking at the way the stock's unfolded as part of this decline, it continues to produce these big bars, these big blue bars. Remember I said they were called, we refer to them as outside bars, where the high is actually higher than the previous bar and the low is actually lower than the previous bar, and it keeps declining. So it is possible to get a trend line, according to Dale's book down here, and we could put one on here, but we'd have to go all the way from the top up to there, and it is a bit flatter because you can't cut through the bars. You see, you've got to think about following the bouncing ball, so we're still waiting for that one there, but we may be able to get a steeper one in here. I'm just seeing if we did, would we have got a false entry? But again, we're cutting through the bars quite a lot, and you know, that's just a big no-no when it comes to trend lines. So that's one of the things that you need to understand to master trend lines and become really proficient in it. But often what happens, if you can draw trend lines well, what you'll find is stocks will often rise up to those trend lines, and so it can give you a really good idea of where a stock is likely to trade to when it's unfolding. One of the first things to do is see if you can get a trend line on the monthly chart as a good medium-term indicator of where the stock's likely to go. But Pact Group, I would say at the moment, it looks like it's trying to turn and slow down at the current level, but it's, like I said, it's below the all-time low. So it's what happens is when stocks trade below the all-time low, they can keep going lower, and if they turn and push back up, they can hit their heads on previous support or resistance, which looks like somewhere around that $3.30 mark. $3.20 something, 25 might be important for it. So that was a question, and so we're looking at that. Now I don't think we're going to see necessarily any sort of big falls again like you were talking about, Joe, on this one. I think that it's had these big falls. It still could go slightly lower. That's the risk with it right now. So look, I think we'll move on now to talk about a few stocks that you guys have been posting like mad on the chat forum, and thank you very much for that. I've got a stock called Bubs, which is interesting. So that really sparked my interest. I wanted to have a look at that, and again, I haven't heard about this stock, not a lot, and so therefore to me I thought straight away it's going to be one of those illiquid stocks again. And it is, look at the checkered history of the chart of the stock. It really was illiquid. It's become more liquid over the past couple of years, but still the volatility of this thing it's huge. And looking at the way it's unfolded, this rise, what does it remind you of? Think back to when I talked to you about the market earlier on the show. What the market showed, it's a similar sort of trajectory as what our market's been on, although percentage-wise it's probably a lot more. And you can see that it's moving up to challenge this prior resistance here where it's pushed through the $1 mark. Now, when a stock breaks through $1, it's like a big party. You've got to celebrate it if you're holding it, because often it could get picked up by institutions. But also the risk is when it trades around that level that it just gets shorted and it reverses and comes back down. Now, there's a gap that you've got to be ready for on the weekly chart. So we could see it come up all the way to this $1.10 mark, and I'd just be watching carefully. But the real risk for this thing is it's a long way from the current price action to any sort of stop loss, really one of the simplest ones, 24% away from that prior trough there on the weekly chart. So you have to really have a good think about how you're going to manage a stock like this. So now, I think it was John Leslie who asked about this particular stock. So yes, it's looking bullish at the moment. I wouldn't suggest that anyone on this forum be thinking about purchasing a stock like this because of the volatility and the risk associated with this type of stock. I would say that if you are trading it, then you really ought to have a trading plan documented as to how you're going to exit and manage yourself out of a share like this. So that's Bubs Australia. And then I've got, I actually had a little message there from, Zoe Lee on BSL, and he's a long-term investor. Zoe's a long-term investor. And Zoe, look, thanks very much for typing in a question about BSL, and I think I've got a chart there for you, which is really interesting to look at the long-term history of this share. You can see here that it recently tracked up to a really strong level around that $20 mark, where historically, if you look back, you can see where it's been before and got stuck here in July 2009. We can see there that we've got resistance there, and it's come up about halfway in that zone there. So really important point it's trading at right now, and it's slowed down. So we may actually see it lose momentum if it trades below this low here in April 2019. We could see it come back and fill that gap on the chart, and that would be a little bit of a concern, because it's really important that you watch it quite closely after that and just make sure that you know where you're setting a stop loss depending on where you've entered. Now, in the book we talk about a 15% stop loss on medium-term transactions. Now, I'm coming up to something briefly I want to talk about. I want to start a conversation on back testing, and what we're going to talk about is one of the reasons why this is so important. And this stock, BlueScope, gives a really good example as to why this is so important for you to really understand, because if you have a good set of rules, and then you will be able to be prepared and trade it well. So last week we had a question on back testing, and some of you may never have heard of this technique. And what it is, it's a process. Along with the right knowledge and solid techniques, you can properly be trained to use this to get your goals. So the goals that we talked about earlier on in the poll, and you may have more specific goals that you've come up with. In order to get those goals from the market, back testing is something that you must be good at. And often people, when they ask me, how much money can I make from the market? Part of the reason why you're asking that question is because you don't know, because you haven't actually proven to yourself what you can make. And when you learn how to trade the market and you've got a structured training program, we teach you how to backtest a share so that you can see for yourself. So you don't have to ask somebody how much can you make. You actually just test the stocks and determine what those stocks can do for you, because they become your workers. So you invest the capital, you need to know how that stock is going to perform when you test a certain set of rules on the stock, and understand what's the average profit, what's the average loss, how many wins am I likely to get, so 7 out of 10, 8 out of 10 wins over a period of time. So we talk to you about how to test it over what time frame, what's important depending on the time frame that you want to trade. But the most important thing with the back testing is you've got to have really good solid rules that you know how to apply without fault. So back testing is it's like it answers all your questions. It's like one of the most important things that you will ever learn to do apart from learning the rules. So once you know the rules and you test those rules, you can see what rules work better. And I remember a gentleman, he emailed into me and he said, gee, if I hadn't done this, I wouldn't have known that, for example, rule Gann swing wasn't the best way to trade this particular share, that over time I would have been better off using a trend line or better off using another combination of rules to get the best out of this share. And that's what you're really wanting to be able to do. So you might be asking, what is it worth? You should ask yourself, really, what is it worth for you to know this? Because with backtesting, you're either going to get it right or wrong depending on how much you've put into this and how well you've actually understood how to apply the rules and test it. So, and just think for a minute, what getting this wrong or having the wrong approach to trading a particular share will mean to your results. And I can tell you, it simply means that you won't get your goals if you haven't done this work. It's really critical in understanding where you're going. And what it does is it builds confidence in you because you start to trust your rules, because you'll see over time that if you get 7 or 8 out of 10 right and you're making more money on the wins and you're keeping the losses short, because the backtesting teaches you how to actually keep the risk side of it to a minimum as well. And if you can do that, then you'll have this for life. And it's something that doesn't matter whether it's a stock, currency, what the market is. Someone asked earlier, I think it was ENS, asked about oil. Yes, oil is a really good commodity to be able to trade depending on what instrument you choose. You don't want to choose something that's high risk, and there are some ETFs that are in oil. And you can trade it like you trade a stock. But you can also trade oil-related stocks or commodity-related stocks like Woodside and find out what is the best rule to be able to trade that, rather than going in blind and just thinking, gee, the stock looks good right now. Dale said I can use a trend line to trade it. I've applied a trend line and it's crossed over it. But a trend line, Dale doesn't mean that a trend line is going to work on every single stock all the time. It's about you determining that for yourself and being able to prove. So if I said to you, if you were trading CUB, CBA, Commonwealth Bank or BHP, for example, and I said to you, this set of rules will get a result 8 out of 10 times, then you're going to be much more confident than just saying, all right, I'm going to be trading this once the stock starts moving up off the bottom, where you're really blindfolded. So that's a message I really want to get across to you today about how important that process is. So remember, backtesting, it's your best friend in the market. We don't have time for one more question, unfortunately. I had Cochlear lined up to talk about it. It's a very interesting share, and if a stock starts going down, the main thing is it's not cheap, that it could always get cheaper, and it's always about managing your risk and looking for opportunities to be in trades when the momentum's behind it. And again, Cochlear has some very interesting strategies that you can trade it well when you've backtested it and learnt what works best. So it's about comparing the strategies and getting the best result out of the stock. So I hope you enjoyed the discussion today, and thanks so much for all the comments there. I was just looking at a few others there that people are interested in, and someone was in New Zealand, I noticed. Fantastic to be in New Zealand. Well, actually we had a few comments on some charts there. Someone mentioned that they're on Module 2. I think that was Alan Branson. Congratulations that you've actually gone through and done the course and you're on Module 2. Well done. So what I want you to do is, over the next couple of weeks, I want you to remember to think about the question that you want to raise on next week's show, because this show is all about you. I'd like to challenge those who are yet to make a comment, and just remember that if you really get into the show and participate, that you're going to get more out of it. The more that you put in, the more that you get out of what we give you. So for those we didn't get to tonight, I sincerely apologise for that. And if you continue to post on future shows, we'll do our best to spot you and respond to the comments. Or you can leave a comment on our channel or on our Facebook page. Now remember to like this video and subscribe to the channel so that you can keep up to date. Make it easy and do it right now while it's in the front of mind. Just as important, make sure you get online next Tuesday at 7 p.m, as we'd love to see you again. We'd love to get the feedback on tonight's show, so feel free to send in an email to wealthwithin or info@wealthwithin.com.au. Just type in Wealth Within Live in the subject line, and we're happy to take your requests. Once again, that brings us to the end of our show. We really hope you've enjoyed it, and as always, thanks for watching. Hope to see you again next Tuesday at 7 p.m. Goodbye, good luck and good trading.